Hello and welcome to the VAT update for charities in the not-for-profit sector. My name is Mark Bishop and I'm just going to run through a few areas that may be pertinent to you and your charities. The topics I'm going to run through today is a quick gallop through business and non-business activities and why these are relevant to the charities sector. We're going to have a quick look again at grants and services, something that we've picked up a few times in the past, but there may be a few extra nuggets that you can take away. We're going to look at VAT recovery, the impact of grants and services on your VAT recovery position and any non-business activities. Then we're going to have a quick look through the structuring for VAT and if you choose to have trading subsidiaries and the considerations you may have. And finally, we're going to have a quick look at the charity reliefs available. There are very few nowadays for charities, but there are the ones that are key relate to energy in this current market. So, business, non-business activities. Why is it important? Well, VAT is a tax on supplies made in the course of furtherance of business. So where we have non-business activities, they do not attract VAT, but equally we do not get a benefit of VAT recovery on any supplies we make. So you may recall around summer of last year, HMRC guidelines changed around their interpretation of a business and a non-business activity. And this was related to changes in how they looked at the Lord Fisher tests, which have applied for the last 20 or 30 years. And now they're really only going to look, HMRC are only going to look at two factors. Firstly, does the activity result in a supply of goods or services for a consideration? And is the supply made for the purpose of obtaining income therefrom? So HMRC have really narrowed down what their interpretation of non-business or business activities are, particularly to take away any subjectivity around the area of what is the primary purpose, what is your principal purpose in making the supply. So there's no subjective test in there now. So if there's a supply of goods or services and there's a direct and immediate link between the two, it is going to be liable to VAT. There no longer needs to be a profit motive or anything like that. So what are non-business activities? The making or receiving of grants and anything to do with where there's no charge for consideration and there's no business motive in making that supply. And consideration can be monetary or non-monetary. So what are grants? Well, grants are freely given with ordinarily no expectation of anything in return. And just because it's called a grant doesn't mean that it is going to be a grant for VAT purposes. In fact, many documents and agreements that you see will have grants written all over them, but it could simply be a supply of goods or services dressed up as a grant. So the grant provider or the funder is often going to want to call it a grant, but it's up to you to determine whether actually it fulfills those requirements. It can be a very, very grey area and is often the difference between needing to register with VAT or not. So when we're looking at grants, we're looking at ordinarily funding that's been provided to a charity where the organisation that's providing the funding identifies a need that it wishes to fulfil, but it can't do it itself or decides not to do it itself. So it can either enter into an agreement with another body to undertake the task and fund that body's costs through a grant or a subsidy, or, and this is where it becomes liable for VAT, they could enter into a contract for the procurement of those services or possibly goods to enable the task to be completed on their behalf. So the key distinction there is grants are outside the scope of VAT and a supply of services are subject to VAT and would require registration if the income is over the 85,000 current threshold. So what are the indicators of grants? Well, does the funder have the legal power to award such a grant? Now, this is an important point. Now, grants are obviously funded through central government in most cases or through local government. So you can often see that they are grants, but they may also be through other charitable organisations wishing to provide funding to other charities. Was there a tendering process? Was there an invitation to tender for the procurement of the funds? Now, this is often an indicator, if you're going up against other parties, that you are looking to enter a supply of services contract, and this will be subject to VAT. So if you're asked to tender, then that's often going to be a key factor that you need to take into account. What happens if the funding is withdrawn? Is there any legal redress? No. So if the funding is provided, but it's then taken away, what would you do? Now, if you would be able to take them to court, or whether you'll be able to get that funding reinstated, then it's often regarded as a supply of services. Who sets the targets? Is it the funding provider? Well, if the funding provider is telling you what you need to do in order to receive the funds, again, this is going to be an indication that there's a supply of services taking place. Does the funding clearly benefit or support specific communities or the public? Now, this is an important factor as well, because often funds are given to address a particular need for the community or through to the public. So that is going to be a good indicator that it is a grant. And we look at this because we need to know whether we have to account for VAT on the income, but also whether we want to be able to recover the VAT on the costs incurred. And just as a quick planning point is that local authorities often provide funding, but local authorities are able to recover their VAT on their non-business activities. So whilst it may be wrapped up as a grant, it can often be beneficial to transfer that into a supply of services, because you can charge VAT on your supplies and recover any VAT that you incur. So it has an added benefit to your overhead VAT recovery. But equally, as the councils can recover that income, the VAT that you charge, then there's no loss to those. They're often happy to do that. So looking at the VAT recovery position, so input tax is the VAT we recover when we're making taxable supplies. And this slide is really just explaining the flows that we go through. So when we're looking at recovery of input tax, if we start over on the left-hand side, where we incur wholly non-business VAT, so VAT incurred wholly in the course of making non-business supplies, then the VAT is immediately irrecoverable, and that gets discounted from any VAT calculations. Often, though, it could be an overhead. So you may, for example, have an electricity bill or professional fees, and these would cover both the business and non-business activities of charity. And then we have to look at apportioning that VAT. So that happens before we look at any other partial exemption or similar issues. So we apportion a VAT, and the VAT that's left, we split between taxable, exempt, and non-attributable as per any other partial exemption calculations. Now, the standard method for partial exemption is well known. It's based upon the turnover of taxable business activities divided by the total business activities times 100. But we can also apply for special methods, and a special method for charity may look at staff hours, it may look at floor space. There's all sorts of things you can do. If you think that the standard method is not giving a fair and reasonable outcome, please look at a special method, although be aware that they do take HMRC up to 8 months. Moving on to trading subsidiaries, around a little bit of structuring for VAT. Now, often a trading subsidiary is set up because a charity wants to protect its charitable assets and make sure that they're not going to be tainted by any business activities or any risks that those activities may present. But also a charity that has primary purpose, charitable activities, may start to try and fund those through other commercial activities and trading that steps outside of its primary purpose. And this is where corporation tax and HMRC's low-scale trading threshold comes into account. So often what we're looking to do is to avoid any corporation tax in the charity by setting up a trading subsidiary through which we will trade, and that the trading subsidiary then can hive up its profits back to the charity without paying any corporation tax, as there's no profit element there. So primary purpose trading is a key issue. HMRC are looking often at what a charity is doing and are the activities that are helping to fund that within their original primary purpose. So to avoid any issues with that, if you move those commercial activities out to a trading subsidiary, then you're going to be at a far lesser risk of HMRC having any challenge. VAT recovery Having a trading subsidiary can often help a charity. So, for example, if you're looking to set up charity shops that may be selling predominantly zero-rated donated goods, or acting as an agent selling others' goods through gift aid, then it's obviously beneficial to have that zero-rated trading or very low-level taxable activity as an agent going through a trading subsidiary, because you can recover all the VAT that you incur on the costs of running the shop. And you may even look at VAT grouping, which would allow you to get some benefits for the whole charity and the trading subsidiary in terms of overheads. So shared resources agreements are an important factor, though, if we looking at trading subsidiaries. So often what we'll find is that the charity holds all the staff and then lends them down to a trading subsidiary. Now, as the provision of staff is a taxable supply and subject to VAT at 20%, that could cause the charity to require to be registered. Or if the staff are moved to the trading subsidiary and then lent back to the charity for other work, then that would also mean that they would have to charge VAT up to the main charity, who may then be unable to recover their VAT, so there can be a VAT loss. So shared resources agreements, joint contracts of employment are a key issue that you may want to consider there. A deed of covenant, which governs the distribution of profits. So then you just need to have something in place between the two that allows profits to be shared between the two entities. Okay, so moving on to some of the charity reliefs that are available. With the current escalation in fuel prices, the key area is going to be for fuel and power. Now, these reliefs are only available to charities. So if you find yourself in a position that you have set up a trading subsidiary, you may lose eligibility to qualify for these. So it might be a consideration. So charities are able to receive reduced rate VAT on their fuel bills when it's used for a qualifying use, or if it's below a certain limit. And these limits are depending on the type of fuel that is being used. The charity simply needs to provide the energy provider with a certificate, and it is possible to backdate those, the use of those. So if you are being charged VAT at the standard rate, then please do consider whether that's something that you could benefit from. Most energy providers are only too happy to help. Charity advertising is zero rated, and this includes print and digital media. Now, digital media is an ever-growing area for charities. The same rules apply, that it can't be targeted at any individuals. It's got to be for the general population. But they've clearly opened up the traditional TV, radio, and printed media into advertising on the internet and websites. There is the zero rating of goods purchased by eligible bodies using donated funds. This is a long-standing relief. So if you're buying goods using donated funds, then they can be zero rated. And membership subscription. So if you offer a membership to your patrons who may be interested in learning more about your charities and maybe receiving updates via letters, newsletters, or books, then you can exempt those supplies. One of the additional benefits is that you are able to split those supplies as a charity, and that will help you recover more of your VAT if you're making zero-rated supplies, such as the books or newsletters. Now, if there's anything that we can help you with in terms of your VAT or the VAT planning, please get back to me. I'll be only too happy to help. Thank you.